So in this video, we're going to discuss the ins and outs of a personal line of credit, what exactly is a personal line of credit, how it works, as well as some pros and cons. So let me ask you, are you a freelancer, a gig worker, or someone who has an unstable income, either due to hours that vary, or maybe you're someone who works in a commission-based field such as real estate? Have you ever been short on cash for a couple days, maybe a couple weeks, and you just needed some extra cash to hold you over until the next check comes in? Well, if this is you, do not worry, you're not alone. Millions of Americans, including myself, have been in this situation at one point in time, and it sucks knowing you may need some money for groceries, to get to work, and other daily needs, and your check hasn't landed in your bank account. But instead of accruing hefty overdraft fees or late fees on those bills that need to be paid, consider getting access to what is called a personal line of credit for these type of emergency situations. But before we get into additional details about this financial product, I just want to thank all of my returning subscribers, all of the Joe Dolls. I appreciate your continued support. If you're new to the channel, welcome to the family. Consider subscribing and turning on that notification bell as I'm posting valuable new content at least twice a week. Alright guys, so a personal line of credit may be a great way to fill financial gaps. You can tap into your line of credit between paychecks instead of resorting to other potentially more expensive options to pay your bills and other expenses and then pay it back once payday comes around. Now this is a financial tool that isn't discussed as much as other financial products such as credit cards or personal loans. I know for myself, Joe Dolls, juggling many financial responsibilities all at once requires a certain level of financial knowledge and, to be honest, access to a number of financial products. Now sometimes particular financial situations like paying off student loans, upgrading a home, or covering a child's K-12 education costs may require a significant influx of cash, even for individuals with large savings. So besides credit cards, payday loans, personal loans, there's a less discussed option that is both flexible and can help provide access to cash, and that is a personal line of credit. Alright guys, so you may be asking, well, how does a personal line of credit work? So personal lines of credit fall somewhere between a credit card and a personal loan. It really is the best of both worlds. So a personal line of credit is just as good as cash. It's very liquid, meaning it's very easily accessible. Matter of fact, with a couple of clicks through online banking, you can transfer your money from your personal line of credit account to your personal checking or savings. So you can apply for a personal line of credit through a bank or credit union, and if you're approved, it will grant you access to a certain amount of money, which is yours to use as you need it for a set period of time. Now, limits on these accounts generally range from about between $1,000 to $100,000, with terms between 6 months up to 5 years, depending on your credit worthiness. Now, similar to a credit card, you take from the available balance only, the amount you need, and you pay interest on the amount. So in this way, a personal line of credit is a type of product that's known as a revolving line of credit. With the personal line of credit, you have access to an available balance of funds. And the good news is that they're available at any time, and you have the ability to draw from the funds over time as you need them. Alright guys, so if you're wondering how a personal line of credit differs from a credit card, one main distinction between the two is access to funds. So personal lines of credit are ideal for accessing cash to cover large planned expenses such as moving to a new city. A personal line of credit can offer access to capital for your planned future life milestones, whether it's covering expenses for minor home upgrades or maybe even starting a family. Now credit cards on the other hand are best for short-term financing with easy payment at the point of sale. So credit cards are great for covering expenses that are within your monthly budget, say maybe treating a loved one to a nice dinner. Now credit cards may offer cash advance options, but the access is often limited to a portion of your overall credit limit, and the fees alone can make it a much more expensive option. Alright, so for myself, Joe Dolls, I have 2 personal lines of credit, one with East Central Credit Union, which I established when I was back in college, and the other one with Wells Fargo Bank, which I set up later in my life. Now between these 2 financial products, I have access to $75,000 in cash if needed. Now before we move forward in this video, let me say that I am not telling anyone to go out and get this product and just rack up a bunch of consumer debt on frivolous things. Again guys, I see this product more as a safety net, and it does have some practical purpose. I last used mine 2 years ago when I completed an extensive remodel on an investment property. Now this helped me out greatly, guys, by being able to essentially be my own bank, because in addition to the money that I had saved for the project, I had a secondary source of cash. Again, for myself, when I used this product, it was never for an extended period of time, and I made sure to pay it back as soon as possible. So once the investment property was completed and I sold it, I was able to pay back the line of credit in full, and I haven't had to use it since. By the way, Joel Dolls, if you're enjoying this video so far and have found any value, please be sure to hit that like button and share with others. It helps me out a ton. So again, Joel Dolls, a personal line of credit is a flexible financial product for several reasons. So number one, with a personal line of credit, you choose when to take advances as opposed to a term loan where you receive a lump sum at the beginning and start paying interest on it immediately. Number two, you only pay interest on the amount that you drawn or borrowed from a personal line of credit. Number three, assuming you stick to the lender's terms, once the amount is drawn against the personal line of credit is paid back, that amount is available for you to borrow from again immediately. So you're able to use the money over and over for a specific period of time. Now, personal lines of credit can be secured or unsecured. So for unsecured lines of credit, you don't need to put up any form of collateral like a savings account to actually apply. For secured lines of credit, collateral would be required before you could gain access to the loan. A common example of a secure line of credit is a home equity line of credit, also known as a HELOC. So with a HELOC, you're borrowing against the available equity from your home, and the home is used as collateral for the line of credit. So a secured personal line of credit may be offered against a savings account. So if you had $5,000 in savings, the bank may be willing to extend a $5,000 line of credit to you, which is secured by your savings. Now, while personal lines of credit offer some advantages, there are some other factors considered that may not make it the right choice for everyone. Number one is fees. So in addition to the interest you must pay on the amount you withdraw, there may be like maintenance fees, even if you don't use the line of credit, as well as fees assessed each time you make a withdrawal. Now, fees vary by lender, so make sure you know what you're signing up for to avoid any surprises down the line. Number two is variable rate. So unlike traditional loans, the interest rate on a personal line of credit is typically variable. So that means you can't be certain what your monthly payments will be in the future. They could go up or they could go down. So if interest rates drops, that's great, but there's also the possibility that you could see your required minimum monthly payment spike. Also, while the interest rate on a personal line of credit is typically lower than that of credit cards, it is typically higher than rates for personal loans or home equity lines of credit. However, there are some lenders out there that do offer fixed rates, which will help you with more financial security. Now, interest rates are at historic lows right now, so it would not be bad to see if you could get a fixed rate on this product. Number three, temptation to spend. So you should know yourself and your spending habits. Having the money can be tempting. I find yourself using it for unnecessary expenses. Just remember, guys, it's not free money. It has to be paid, and interest fees can add up quickly. Number four, in a sense, debt is debt. So while it is convenient for you to use your personal line of credit, it is just like any other type of debt. It will be calculated into your credit score as revolving credit, and if you're unable to make regular on-time payments, your credit can take a significant hit. Again, Joel Dolls, I have to reiterate, a personal line of credit is another financial tool out there among many. The last thing I want for you guys is to get in over your head. However, I do think there is a time and place for this particular financial product. If you are someone that finds themselves in situations where you need quick access to cash to hold you over for a specific period of time, this could be a good financial option for you to consider. So what are your thoughts about a personal line of credit? Do you have one, or have you considered getting one? Please comment below. If you found value in the video, please hit that like button. It helps me out a ton with the YouTube algorithm. Be sure to share it on all of your social media platforms. And do not forget to subscribe and turn on that notification bell. Thanks for watching, and until next time.